Your most painful learning experience, and what would you recommend somebody watch out for if they're getting into?
Yeah, so my most painful learning experience was a stock that Quorum Health, which was a spinoff of Community Health Systems. So Community Health Systems or Services, I think it's called. It was like 3 years ago. Was a hospital, for-profit hospital company. It spun off Quorum because it wanted to separate its urban hotels, which the parent company would keep, from the more rural hospitals, which Quorum would keep. And I did the math, did the work based on management's guidance. It looked like it was trading at 5.7 times. EBIT, or on an EV to EBITDA basis, was trading at 5.7 times, or roughly there around. Peers were trading at 7.5 times. It had a lot of debt, but less debt than its peers, and it was going to be selling certain. It thought that it'd be able to sell a couple hospitals and gather or get about $100 million of proceeds, which it would use to pay down debt. And those hospitals were unprofitable, so you would increase EBITDA, pay down debt. And so it seemed like an awesome setup. I mean, it was really highly levered. It was like debt to EBITDA was 4 or 5 times. But the thesis, and Greenblatt talks about this, that sometimes that's a big opportunity, was that if they can, sell these hospitals, pay back some debt, EBITDA goes up, eventually they trade more in line with peers. Even a 2-turn improvement in their valuation multiples with all that debt would be just a massive, increase in equity value. And so, it was trading at around 10. By my math, the upside, it could get to 30 if all the stars were aligned. So it looks like there was pretty significant upside. They announced for their first earnings report after being spun out, they decreased their guidance by 50%. So they decreased revenue or EBITDA guidance by 50%. So the stock got crushed. It was down 50%. It ended up, coming back a little bit. I ended up getting out at $6. But the reason why I got out was if you cut EBITDA in half, basically all my math goes out the window. It's actually not cheap versus peers. Also, management just completely blew credibility. Also, it has tons of debt. So, the thesis was just completely wrong. And so that was very painful. But 2 lessons learned from that one. One, when management gives guidance, you have to independently get comfortable with that. Not verified, you'll never be able to completely verify it, but you need to go through the numbers and say, does this make sense? Is this doable? In kind of looking back through that, I based a lot of my investment decision on that guidance number. But then looking back through the transcripts, I realized that the management team that had been put in front of in management of the spinoff hadn't really signed off on that guidance. They had, the parent company said, hey, here's our guidance for the spinoff, but the new management team for the spinoff hadn't really had a chance to get in there, analyze the business, and communicate guidance. So I realized that, that's something to look for. So make sure that when you're evaluating a spinoff, make sure that the management team knows the business, has been working in the business, and if they do issue guidance and it looks cheap on a guidance basis, then just do the math, create a little simple model, just with historical revenue growth and margins and what needs to happen for them to achieve their guidance. So that's one lesson. The other lesson was the debt was the interest rate on the debt was 11% or something, which is it's just a red flag. I mean, debt investors are, risk averse bunch. But even so, interest rates are so low nowadays. For a company to have an 11% debt, it just raises a red flag. So one thing I really look for, and that was an interesting thing with Garrett Motion, is Garrett Motion's debt was, I think, 4% or something ridiculously low. So that also gave me confidence that the business model for Garrett was more sustainable than maybe the market was thinking. But in the case of Quorum, getting back to Quorum, the debt interest rate was just very high. And so if I see that again, it makes me definitely second guess. What am I missing? Is there something that I'm not fully grasping? So I guess those would be the 2 takeaways. Just interest rate. What does it look like? What do the debt holders know that I don't? or what are they concerned about that I haven't thought about? And then number two, is management's guidance, is it actually achievable?
Yeah, I appreciate what you're saying about debt. That is a pretty good way to kind of identify where a short position might be established on a particular company. So, oh man, that's awesome. Yeah, one thing, going back to the Garrett thing, now that you bring it up, when it comes to debt, I also included the asbestos liability in there because I think that is part of the issue.
Yep.
Garrett, where they're
definitely
a little bit concerned about it, but anyway.
Yeah. Exactly. And I don't know what your thoughts are on that, but it seems the nice thing is that it's not it's subordinated to the debt. So if they get into issues, they can defer the payment to Honeywell. And then the other interesting thing is is that it's that asbestos payment is not or it's basically, they can't deduct that from their expenses to reduce their taxes. So if that ever were to go away, which, it will go away at some point, that's going to be a massive increase to free cash flow. So it's a matter of when is it going to go away? Unclear that it'll be anytime soon, but at some point that's going to be a big, big windfall for the company.
Yeah. That, and it was capped. That was the other thing that I was looking at with that. Cause I was like, if it's capped, their annual expense, it's painful to see it happen, but I think I might live with it if something's doing the cash flow like that. So
exactly. And maybe that's the opportunity too, right? Like people see asbestos liability, they say, oh my gosh, I'm investing in an auto supplier at the peak of the cycle with massive debt and asbestos liability. No thanks. And that was my initial reaction to the stock too, until I dug in. But sometimes it makes for a good setup.